Hey traders, it's Serge Berger here. Given the fact that we're in the middle of earnings season, I wanted to go through a very important concept and one that I really try to and have over the years really ingrained into my head to make sure that I don't put on trades before a stock reports earnings. Okay, there is this philosophy in the sense that some traders have, mostly of the novice kind, when they start to trade, that there are really juicy profits to be had by making a bet ahead of the fact. In other words, they will get into a stock and they'll start making moves in the stock, either going long, buying it, or shorting it in anticipation of what they think the earnings will be like. Over time, that is a losing strategy. Okay, and let me repeat that. Over time, going into the stock market and buying or shorting a stock in anticipation of what you think the earnings will look like is a losing proposition. Um, the simple reason for that is because there are too many folks focusing on the earnings plays. In other words, a lot of people will evaluate either the outlook, the earnings in the past, or there's some wording they didn't like. There are so many little things that can happen in an earnings report, and people either like it or they don't. And whatever bigger player or more amount of players prefer one side is where the stock's going to move. Now you could say that's arguably the case every single day. The problem is around earnings, you have a much more important news flow to really sort of measure against, and mostly that's based on the outlook. So I'll give you an example here. I mean, give you millions of examples, but let's just look at Lululemon. Everyone should be aware of this stock, and you can see here in earlier last year, coming into the second quarter earnings season, the stock was really trading very well. Technically, started to look like it's going to start breaking up, forming a tight base up here. But after they reported their earnings on, I guess it was the 10th of June, on the second day the stock dropped off something like 17 or 16% in one day, slicing through all the moving averages and everything, and pretty much just kind of breaking the past few months rally all in one day. So that's really the reason why it's not worth doing. The other thing is, a lot of people think, well, you might be able to do a trade in after hours or in pre-market trading after the numbers came out the night before. That doesn't really work either, and I can tell you there are so many cases where a stock in after hours, after reporting earnings, say will be trading up or down 3% as an initial reaction, and the next day, either before the market opens or by the end of the trading day, the stock does exactly the opposite. Either, in other words, it then either is up or down 3% or whatever. The point is, it's extremely random. So if you want to have a repeatable trading strategy, unless you're trading options, and I'll describe this in another video, how to potentially use option spreads to play a stock. But betting on a stock and holding a stock through earnings, if you're from a trading position point of view, is a losing game over time. I hope this makes sense. Take care.